Welcome back to the APSCC 2020 live webinar series. I'm Christopher Slaughter, your MC for the series. Today, the subject is risk management, the space insurance business. Is this a turning point in space insurance? Today's webinar is brought to you by Aon ISB. We're very pleased to have their support for the series and for this webinar in particular. This is always one of the more popular one of the more popular conference panel sessions when we hold it at the APSCC conference series. We're confident that there will be a lot of interest in this session today as well. So with no further ado, Jaclyn Chan will be our moderator for today's session, and we'll let her take it away.
Thank you all for joining us for this panel on risk management, appropriately titled A Turning Point for Space Insurance. And thank you again for joining us at the APSCC webinar seminar, which is for the first time being held on the internet. You know, in past years, we would have had the opportunity to meet together in a lovely part of the world and enjoyed each other's company and conversations over food and drinks while sharing insights and updates in the world of space and satellite. But now looking at where the world has moved to and the new normal that we find ourselves, that reality seems so far away, and instead here we are. And so until we get the chance to meet again in person, you know, we're very glad to have each of you join us on this webinar. And this panel, as always, seeks to discuss the how and if the insurance world has changed and the impacts of the current climate, as well as just developments in the space industry and how that impacts the space world. I'm once again joined by familiar faces and friends on this panel, each of whom are lauded experts for the expertise and experience that they bring in their respective fields. I'm Jaclyn Chan. I'm from Millbank LLP, and I'm a partner there in the Space Insurance Group. I'd like to introduce you now to each of my panel members. Can I kick it over to you, Matan, and have you for a short introduction?
Hello, Jaclyn. Thank you very much for the introduction. Indeed, it's a bit sad that we are not in Mania this year for the lovely APSCC conference, but I hope next year we'll be in a better shape. So I'm working for Aon in the space group, Aon International Space Broker. So we are providing advice and solution in different type of fields, risk, health, and retirement. For the space group, we are a team of 20 people with diversified skills in insurance, engineering, contract, and finance. As announced a few months ago, there's a current combination of Aon and Willis, which was just approved by the respective shareholders in August. And now we are waiting approvals from 100 regulatory bodies from different countries. And we expect to have the close of the transaction in the first half of 2021. Until then, we are really operating our separate and independent companies.
Great, thanks so much, Matan. Can I turn it over to Denis? Would you like to make a short introduction?
Yes, thank you, Jaclyn. Thank you. I'd like to thank you, the APSCC, again for having me this year in the risk management panel with you, Jaclyn, and Stephan and Martin. I'm very honored to be there again this year, and we've got a very interesting subject, which is a turning point for space insurance. But before we get there, just give you a brief introduction. I'm Denis Bensoussan. I'm head of space for Beazley. Beazley is a Lloyd of London syndicate. We specialize in international corporate risk. space being one of them. I've been doing space for more than 20 years now, and that's my 5th APSCC, although that's the first one I'm doing from Europe rather than in Asia. But still, we try to keep the focus on activities in Asia as well. So thank you for that, and I'm going to leave the floor to Stephan.
Yes, please, Stephan, go ahead.
Thank you, Denis. Thank you, Jaclyn, for this very good introduction. Yes, it's a shame that we cannot meet up in person this year, but hopefully next year will be better. I think that's the hope of everyone. As far as I'm concerned, so just a brief introduction. So I'm Stephan Riv. I am the head of space at SCOR Specialty Insurance, which is the large corporate risk insurance arm of SCOR, because SCOR is actually a reinsurance company. But for some specialty lines, including space, we act as a direct insurer. So in this respect, SCOR is a historic leader. We have been on this market since the beginning, and we've got more than 35 years of presence on this market. And we've got the objective, obviously, to generate profit while playing a leading role on this market.
Great, thanks so much, Stephan. So why don't we kick it off? I think the first item on the agenda, as always, is to ask you for an update on the space market. Can I ask Matan to maybe just take that topic and bring us into that?
Sure, with pleasure. So, can show the first slide. Yeah, so I think it's good to start this conversation with what is the overall market dynamics of the space insurance market. And over the past 20 years, we see that there was a lot of evolution. That's a volatile market. And as any market, it follows the law of supply and demand. And of course, the higher capacity available, the lower the rate. So you have in the gray histogram, the theoretical capacity, which is the capital allocated by each insurance company to write space business. The right curve is the typical launch plus 1 year rate, or launch plus 16 months, because now the coverage has been extended to 16 months for launch insurance in order to take into account the launch. So that typical launch plus 1 year rate today is in the range from 7 to 9% for spacecraft and launchers with a good track record without first flight item. And of course, the 7 or 9% rate depends on the sum insured required by the customer. For sum insured below $100 million for the same combination of spacecraft and launcher, we can have rates below 7%. And in extreme cases where you have a combination of spacecraft and launchers, which were the cause of large losses in the past, we have seen rates this year going above 20%, which is very high. So the turnaround which occurred in 2019 and has led to this dramatic increase of rates up to 3 times for launch vehicle flight only phase, for example, is a bit different from the previous turnaround that we had on the market, which was in the early 2000s, because in the early 2000s, the 9/11 attack created a move of capacity from the space market to the aviation market, because the rates were very high on the aviation market. And usually space and aviation as considered roughly in the same group from a specialty insurance standpoint. So this decrease of capacity in the space market, which was also due to the generic failure in the geostationary platform widely used, has created this decrease of capacity up to $500 million in 2004. Today is a bit different. We still have a high level of theoretical capacity, as you can see on the graph, because it was following several years of steady increase of theoretical capacity due to accommodative monetary policies, providing low rates, and of course also an increase in the reliability of satellite and launchers. So we still have a high theoretical capacity, but the problem was the low level of the premium and the losses in 2018, and of course the large, one of the biggest loss in 2018. So if we go to next slide and we show the evolution of the premium, so the bars in red, we can see that since 2015, there's a sharp decrease of the level of premium, and we have reached the lowest level of premium in 10 years last year, and also in 2018 in the range of $500 million. It's of course due to the decrease in the rates we have seen in the previous slide, but also due to the decrease in GeoComSat orders, because GeoComSat order provide 80% of the premium level for the overall market. So today we are in a difficult situation where the total level of premium is $500 million, but if we look at the peak insured value over the past years, and for example, the peak insured value was $800 million in 2019, it's not enough to cover, I mean, the total amount of premium is not enough to cover the annual peak value, which is, which means that one total loss can wipe out all the premium over a year. And of course, insurers are reducing their capacity, and they're looking for higher rates to compensate this big losses. So where we are today, in 2020, in terms of claims and premium, so we have an estimated claim amount in 2020 of $420 million. And as of today, of course, the level of premium collected is below the total claim amount, which is a big issue. But we expect the total premium to be collected this year in 2020 to be in the range of $480 million, which means there's a possibility for a positive year. But we still have two uncertainties about two events. One event may not materialize, which was a big possible claim, because you know, in the space insurance, once you have an uncertainty about possible damage to your spacecraft, you put a notice of occurrence, but then you have to file 6 months after the real proof of loss when you are claiming the amount to insurers. So there's a notice of occurrence which may not materialize this year. But on the other hand, we have another uncertainty on a spacecraft which is currently in orbit raising phase. And as long as the spacecraft has not reached its final position, and we don't know the exact health status of the spacecraft, we don't know if there will be a claim or not. So we are a bit in a unknown situation, but with maybe a positive outlook for 2020. So on the next slide, we would see how the working capacity has evolved over the past 2 years. So we are talking about the working capacity as the capacity actually deployed by each insurer for a very attractive risk. And while the theoretical capacity is close to 1 billion, we see that today, in October 2020, we have working capacity available for launch risk of around $600 million. So it's a sharp decrease compared to before the turnaround. If we see in January 2019, we were at 720 million. which means today it's could be challenging to ensure, let's say, a very large VHTS spacecraft launched together with a 3-ton spacecraft. And the reduction of the working capacity is mechanical, because since the sharp augmentation of the insurance rate, insurers do not need to allocate their full line to reach their forecast of premium for the next year. They know their revenue will increase based on the increase of the rate, so they can just decrease the line they allocate on each placement to keep their revenue forecast unchanged. We have to say that end of 2019, after the big losses, $800 million of losses is huge. So each space underwriting team has to convince their management to remain in the space business, to update the business model. So now there is a much more scrutiny from the management of the specialty insurance group. There are more restrictions on the way underwriters provide coverage, exclusion, or deductible. In some cases where, one spacecraft had some previous anomaly, it could be almost impossible to provide 100% coverage for certain in-orbit spacecraft. So we are in a difficult situation only regarding the space, scope. But if we look at other specialties, for example, in aviation, with the grounding of the Boeings, or even in the energy market with the blast of refineries in Philadelphia and Texas, it's the whole specialty insurance business which is in loss. So the reinsurance markets, which provide capacity to those specialty markets, and they are currently negotiating the renewal of the treaty because they are providing capacity to direct insurers. And we don't know how this negotiation with the reinsurance company will end up. There may be a possibility that the reinsurance company will ask for a further increase of the rates, and this will be effective by next year. So we are in a very challenging market. We have seen for a very long time, and clearly the reputation on the market of the insured, the quality of the information provided to underwriters, and also the right timing for starting the placement are really the key factor of success for a good placement. So
Great.
that's
thanks so much, Andy. That was very comprehensive, and really appreciate the depth of your analysis on that. Let me ask you a couple of quick questions for the panel, and anyone should feel free to answer this. But what do you think are the current rate levels? I mean, we always ask this every year, but I guess if we had to do a prediction for the next 12 months, where do you think the rate levels are going to go? Particularly, I mean, it might be clear given the light of the tightening capacity, but let me ask that. Maybe Stephan, would you like to take that first?
Okay, yeah, thank you, Jaclyn. And thanks, Martin, for this very comprehensive and complete introduction regarding the status of the market today. So as far as the rates are concerned, are they at the right level? That's really the question today. My opinion on this is that if we take a risk individually now, the rate have restored some kind of technical margins, which means that an individual risk has an expectation of gain if we look at the rate itself. But if we look now at the pot of premium, the annual pot of premium, as Martin stressed, it's far than being enough. We don't have enough premium to cope with the volatility of the market, with the peak exposures, and mainly, again, the main characteristic of the market being the volatility. So my feeling is that the pricing today doesn't have a load which is high enough to cope with the volatility of the market. And in order to get a more sustainable market, I believe that we should have more loading on the rates on top of the technical rate.
And what about you, Denis?
Yeah, we just had a couple of comments to what Martin and Stephan have said. I think where the rate level is at the moment is really a question of the eye of the beholder. I think for insurers, it's always going to be too low, and for the client, it's always going to be too high. I think one major comment I would make is the current rate is fragile. And it's fragile because, as Martin said, there are a level of uncertainty which is remarkable at the moment. We not only have uncertainty with respect to internal space events, you mentioned potential claims, so we do have some gray clouds over our heads, and we don't know really when those are going to materialize or not. But also the external factors is still there. We're relying very much on the space industry. Others in the APSCC forum this year have discussed at length about that, but we're relying very much on the space industry, which itself rely very much on the overall economical situation. And we can't be blind to the fact that there would be an impact from COVID, and I think we're going to talk about that later on, but there would be an impact from COVID on the economical situation and on the satellite industry. We're not seeing that now at the moment, and that's a very positive thing. We're feeling that the satellite industry is quite robust, and I demonstrated that. But nevertheless, there are numbers of internal factors and external factors which make those rates fragile. And it wouldn't take much for them to effectively go up higher if effectively claims are materializing, or if some major capacity are withdrawing. And Martin mentioned reinsurance. I think that's a big question mark. Reinsurers have been suffering, and they've taken the brunt of all the catastrophe happening this year, and they are under pressure as well. And a lot of the space market are relying on reinsurance. So pressure could come from there as well. And so I think it could go either way. I think also the rates going up now is the result not so much of the capacity getting scarce. It has reduced a little bit, but it's more like a collective discipline within underwriters, conscious that something has to be done. And this discipline, it's a fragile setup. It's relying basically on people and management pressure. So again, that could change. So I would say for me, the rate is fragile, and they could be high, they could be low, but I think it's probably a sort of moment of stability for now. We've seen stability in the rates for the last maybe 6 months. That maybe for clients, it's not such a bad time to start thinking about buying insurance at the moment.
So, I mean, you raise a good question. It's a good segue into the next segment about, how do you think COVID has impacted the operations of the space insurance market? I guess let me direct that question first to you, Stephan. What are your thoughts?
Well, from an operation standpoint, I would say that the space insurance market, I mean, like insurance at large and space insurance in particular, has reacted seamlessly to the situation. We obviously had to adapt to the working from home environment, which has been done in a transparent way. We have attended virtual briefing where new risk was presented to us. We have settled claim in this environment, so we have kept our underwriting activity in a normal way, I would say. Regarding the payment of premium, we have not been affected by COVID. I mean, we received the premium at the planned terms as expected. So really, in most of the cases, so really not impact in this respect. All in all, I would say that this COVID crisis has just accelerated the modernization and the digitalization of the administrative processes, especially with the e-signing. So I think that the market responded well. shall this be the new norm when we can recover a normal situation? So my personal opinion is that it's not desirable because yes, we had some technical briefing done remotely, but at the end, honestly, for an underwriter, it's much more difficult to follow these briefings, to understand really the risk because there's less interaction, there's less fluidity during the presentation, and we also miss all the side meetings that we can have during a briefing when we can get further explanations on the risk. And also, we must not forget that our business is also there's a large part of commercial activity, and you will never replace face-to-face meeting with digital meetings. And at the end, our business is also very much a people business. So I think that when the situation will recover, we hope that we can resume also the way we were working in this respect for these technical briefings.
Yeah, I think all of us are looking forward to being able to meet in person again. I guess, Martin, how would you say COVID has impacted your clients at least? Have you seen any impact on decisions?
Yes, first and foremost, from a global standpoint, not speaking about space customers in particular, we have seen the strong, revenue decline, and this has put a lot of pressures on operational expenditure, including the budget for insurance. So we had to discuss with them how to, still insure the core risk of their business, but without fitting with their new budget constraints. We have also seen the settlements of claims, which were more difficult because of all the uncertainties brought by the COVID on the overall insurance market. For space in particular, of course, we have our clients providing services in mobility markets, aviation and maritime. Of course, those business lines have been strongly impacted, but overall, their business is pretty much resilient because connectivity is more than ever needed, during this weird time. So, in terms of revenue, that's not the biggest deal, I would say, except for mobility markets. In terms of really placing risk, we had an issue because we placed an insurance for a package of spacecraft a few years ago, and you have what we call the policy period in the insurance, which is the period during which your spacecraft must be launched. Otherwise, if it is not launched during this 3-year period, the conditions you have negotiated with insurers, rates, line, everything could be renegotiated. And when you start placement on the market, you have some benefits by doing a package of spacecraft to attract, the best conditions from insurers, because you provide a good visibility on their revenue. And those satellites, sometimes they don't have the same, manufacturing schedule. And the problem with the COVID is one of the launch was very much delayed because operations was just impossible on the launch pad. So one of the spacecraft which had to be launched before a specific deadline, which was the end of the policy period, could not, because the launch was delayed by several months. So we went out of the policy period, and actually the insurance was no longer, the coverage was no longer valid for our customers. So we had to renegotiate with each insurers the condition of their participation to the new placement, while the rates had increased a lot since the turnaround of 2019. Also some insurers which were on the previous placement were no longer writing space risk. The full premium were paid, so we have to get back all the premiums from the insurers and reallocate all the premium to new insurers. But the conclusion is that the underwriters were really supportive to us, and they, were successful in convincing their management not to charge too much the replacement, because that's an exceptional, event. And eventually we were able to replace almost the same sum insured within the same budget for our clients. So, but this is typically the kind of event from the COVID.
Stephan, did you want to add something to that?
COVID actually had a big impact on insurance and reinsurance at large. Most lines of business, it's a global event. It again, as I said, it has impacted most of lines of business, but not so much space for several reasons. To start with, in terms of claims, as you probably know, in space, we are insuring physical damage on the satellite from intentional ignition. So obviously the satellites are not impacted by this virus, at least. So no impact on claim from COVID, no claim related to COVID directly. In terms of premium income, it actually had an impact because a couple of launches had to be postponed because either the launch base was closed, for example, in French Guiana, or also because the satellites were not ready, because the manufacturing site were either closed or the engineers could not travel to the launch site. So there has been some delays in launches, as mentioned by Martin. But this results not in a loss of premium, it's more a deferred loss, because these premiums differ to 2021 because it's just a postponement. It's not a premium that is definitely lost. So in this respect, this is how it impacted the market. We assess that there will be around $100 million of shortage of premium this year with respect to what was originally planned. And the immediate consequence of that is the increase of the volatility for this year, for the results of this year, because the pot of premium is lower than expected. So it was already low and it's even lower than expected. So the volatility is increased. In terms of underwriting activity, again, there's been some delays in the project. So some placements have been also postponed probably to 2021, which means that we will have less underwriting premium activity this year than originally expected.
Right. No, I think that all makes a lot of sense. Well, I guess when we talk about like looking forward into the next couple of years, maybe let's move on to talk about, new challenges facing insurers in the space market. The key question that we would have is, given the advancements in the industry, how do we see the evolution of the space insurable matter for the next upcoming years? So I think we've picked up a couple of subtopics that I think we've identified as potentially impacting and which space insurers are looking at. Maybe I can turn it over to you, Denis, and maybe if you'd like to talk about what you think are the challenges coming up.
Thank you, Jaclyn. Yeah, I think effectively what we've seen for the past few years is a significant change coming up in the insurable volume of business and insurable matter. I think the first and foremost, I think the remarkable situation is, in a few years, maybe next year and 2022, we're going to be facing a whole new stack of launch vehicle. I think we've discussed that in previous years at the same panel, and I'm not going to spend too much time on that, but the salient fact is, whereas in the past we've always been able to rely on mature launch vehicle to launch the satellite, and maybe one or two new ones starting their career. Now, 2022, 2021 are going to be the years where there is effectively a large number. All the major launch vehicles are going to be new launch vehicles. So I'm talking about Ariane 6, I'm talking about H3, I'm talking about Vulcan, and for the large launcher, heavy launcher. And then there is a whole new stack as well of a smaller launch vehicle, the Vega C, and also Falcon 9. Falcon 9 is always iterating itself. So it's always a sort of changing design. So while at the moment it has reached effectively a very high maturity and reliability, we don't know whether its next evolution are going to be the same in 1 or 2 years. So the question for us is how to face this large accumulation of new risk, and how do you manage that in an insurance book? And that's the question. The principle of insurance is that your book is built with a majority of good and mature risk and some more risky profile. Here, effectively, the question is, most of the book is going to be made of new, unproven launch vehicle. And that's the key point. The key point is not to manage 1 or 2 of them, but how to manage all of them being new and unproven. That being said, I think we are also kind of benefiting from the advance of modern technology, whereby launch vehicles are maturing in a sort of quicker fashion than it used to be 20 years ago. So whereas we're going to face a new whole situation of new launch vehicle, it is hoped that those launch vehicles, because they are coming from legacy manufacturers, experienced manufacturers, and because also they are evolution of their previous launcher, that the maturity level are gonna come back fairly quickly. So that's the first point. Other new challenges coming from the satellite business more is the VHTS satellite and the flexible spacecraft. I think we've seen in the last few years as well the development of very high capacity satellite to provide for broad, high bandwidth satellite. And those have been very successful commercially, and we can expect effectively more of them to come. And the driver for those very, very large satellites as well has been digital payloads. And how it is a challenge for us. It is a challenge for us because it makes everything very complex, whereby once we had physical or analogous communication channel, now we've got multitude of digital channels, which leaves a lot of opportunity. So effectively that provide probably a little bit more flexibility and probably more room for absorbing small anomalies. It makes the coverage and the loss formula very, very complex, because it's very difficult to grasp at the design phase or at the satellite placement phase all the different configuration that could effectively occur on the satellite. And that's a key point. Making coverage complex and making loss formula complex basically open the door to complex settlement of claims. And that's a key point. So I think we, as space expert, as satellite underwriter, we need effectively to make sure that our policies, and that's to be done in cooperation with the clients and the broker, but we have to make sure that we evolve our policy, we evolve our coverage, we evolve our loss formula to make sure that they can grasp the extent of the complexity coming from those digital payload, and make sure that we capture as well the flexibility which is sort of seek by the customer going for those digital payloads. So that's a big challenge. And I think people are getting the expertise at the moment, but effectively that's something which should always be very conscious of. And that's allow me to go to the next item as well, which is constellations. Constellations are not new, definitely not. We've seen that a long time ago, but it looks like in the last couple of years, the concept of constellation has really sort of matured and is taking root in the space industry. We've seen Iridium being quite successful, Orbcomm being successful. I'm not talking. I can't be not talking about the elephant in the room, which is Starlink. Starlink looks to be effectively quite effective and promising. But also O3b has been proven very successful, and And OneWeb had a big question mark because of the sheer size of the project, but now it seems after some difficulty that it's back into being on track and in good hand with the UK government. So constellation are probably there to stay, and they're going to be effectively a permanent feature of the space business for us. And again, there are natural difficulties for satellite insurer with constellation. First and foremost is the fact that insurance for constellation is not as obvious a solution of risk transfer than for a single satellite, because you got the sheer size of the constellation make the technical risk transfer also an adequate solution, in competition with insurance. Insurance has always had a difficulty to provide a competitive solution for constellation, because there are also issues with generic problem, because every satellite is the same. They're not tested the same way as one big satellite. So that leaves effectively difficulties. But first and foremost is the fact that insurance is not an obvious choices for constellation operator, and we have to make sure that we adapt to that situation and make sure that we carving adequate solution for constellation.
I mean, you've raised a lot of very good questions and very good points. Let me ask one question and open it up again to the panel. I guess, you just catching on from what you just said last, is the prognosis for third-party in orbit liability insurance, for example, for constellations, given the proliferation of LEO satellites and launching them now?
Yeah, I think constellation effectively raised the question of congestion and the density of objects in low orbit, especially because that's where those constellations are located. And obviously this becomes a question. People are taking the view that the increased density in low orbit, which is accelerated by the deployment of those constellations, create a situation where effectively whether space activity in low orbit would be sustainable in the near future. And there's been lots of questions raised on that point. I think we probably need to keep in mind the proportion here. Yes, space is increasingly becoming more congested, and there is an increasing number of satellite avoidance maneuvers happening. We're not at the critical point yet, but effectively that's the time where we need to be careful. That's the time where we can still stop things for degrading and making life of space operator difficult. So I think at various levels we need to make sure that guidance and good regulation are in place to make sure that space remain open for sustainable business, and that happen at our level, insurance level, that happen at government level, where effectively we could look at more regulation to make sure that development of low orbit satellite doesn't and damage the future of space activity.
I mean, just talking about the congestion in space, that obviously brings to mind the constant refrain around space debris. So what's the current thinking? I mean, right now we know it's currently, how's space debris currently assessed by space insurers? What's your prognosis for that? Is it ever going to be not included as an exclusion to liability to cover? Stephan or Martin?
Well, so far space policy or all risk policy, I mean, we cover all perils except a couple of exceptions, and debris are not part of these exceptions, and there's no intention to exclude debris from coverage. The debris issue is more related to the low Earth orbit, doesn't really affect the geostationary orbit, but it's sure that the increasing number of satellites in orbit increases also the probability of collisions, and debris is a growing concern for us. And as Denis was mentioning, I mean, you know, as insurer, we can also have a role to play in maintaining a sustainable space environment. We should promote and give more insurance facility, I would say. I mean, this is score my personal opinion to those players that really take into account the sustainability of space. So there are some satellites now that are launched without any propulsion on board, so they cannot do any avoidance maneuver in case there's a collision, a possible collision with something. So as far as we are concerned, I think it's also part of our role to promote somehow those players to be very conscious of the sustainability of space, which is the good of all of us also on this planet.
Oh, that's a really great point. I guess, you know, just looking at that, do you see any further differences in basically maybe addressing the new insurance needs given by, you know, what we've identified as new insurable matter, whether it's constellations or LEO or otherwise in comparison to the traditional operators?
Well, actually, what we can see today is that if we compare the insurable matter that we're having today with respect to what we used to have 10 years or even 5 years ago, the insurable matter is much more diverse, and there are much more technical features, different technical features for the insurable matter. In 5 years or 10 years ago, I would say that the meat and potatoes of our business was made of geo-telecommunication spacecraft. We had to insure 20 to 25 big geo spacecraft a year, and that was making the bulk of our business, and it was ensuring a big level of premium for us. It was easier to balance our book with this bulk of insurable matter. Nowadays, the bulk is still made of geo-telecommunication spacecraft, but we also have MEO and LEO telecommunication satellites, part of constellations, and also low Earth observation satellites. And it makes the risks much more diverse, and also there's a far higher range of sum insured. Only within the telecommunication market, the geo-telecom, we will have the small, flexible geosat up to the big birds, the VHTS big birds, so with a range in the sum insured which is very high. So it creates challenges not only in the risk assessment, but also again in the volatility of the portfolio. And on top of this bulk of business, we also have more and more scientific missions to insure, mission to the International Space Station, without forgetting all the new space missions. So the demand is much more diverse. I think it's good for us because somehow it replaces the shortage of geo-telecommunication order, but it's not enough to smoothen the volatility of our book at the moment. So yes, I would say that the space market, as always, is happy to go along with all these innovations and to be business enablers. We are excited to look at this new insurable matter coming up. And beyond what we are seeing now, we can also think about the upcoming future in a couple of years' time, which is related to space exploration. We have not touched this topic yet. And I believe that with the commercialization of space exploration, we will have also many more opportunities for insurance in the next future.
Well, why don't we touch on the last couple of topics, really, as you said, about new missions and space resources exploration. Denis, why don't you take us through that? I know you had a lot of good views about that.
Yes, thank you. Thanks, Stephan. I think, yeah, as you said, I think as insurer, we welcome innovation. We are excited to deal with new projects. And, one of those major projects I like to talk now is Starship. And if you want to launch the short video, I think I'll try to talk over it. So that's by the way, that's a short video which has not been made by SpaceX, but it's been made by some designer office in Europe. And that's effectively show us the kind of revolution that Starship is bringing to the space industry. It is being tested at the moment, and basically the design of spaceship, the manufacturing of the Starship, the testing of Starship, and without even talking about the missions and performance is challenging. You know, for us, is bringing us in a whole new world. You know, we've never insured rockets that big. We've never insured rocket being made outdoor. We never insured, you know, this kind of concept of operation, and I think that's a huge challenge for us. The good thing is that SpaceX has demonstrated over the years that they are capable to embrace that change in terms of technology and the change in terms of and innovation and iteration as well. So that's effectively to their benefit and to our credit, to their credit and to our benefit. But it is definitely a challenge, and as you could see on the film, that's probably the sort of the most interesting and difficult place for us. You know, they're going to launch hundreds of satellites at the same time, not 60 as today, but hundreds. And, you know, there will be accumulation problem for us. You know, I'm not going to speak again about the constellation issue, but that's effectively the case. And now you're seeing the sort of the other concept of operation, which is effectively the return, not only on the first stage that has been sort of matured now, but the return of the second stage. And the way the second stage is going to return as well is quite innovative as well. It's not a plane. It's not coming back like the space shuttle. It's not coming back as a capsule. It's just a kind of hybrid. So it's going to glide back, and then it's going to do some sort of retro landing. And the sheer size of the whole thing is just challenging in itself. But also, so insurers are going to need to effectively adapt to that and effectively make sure that we're providing the right insurance solution for you know, covering those risks, and, you know, from an asset point of view, and giving effectively the confidence to SpaceX customer that, you know, they're going to be insured if they choose to launch on Starship. But also from a third-party liability point of view, you know, the second stage gliding is going to glide over, you know, populated area where effectively, you know, there are some increased risk, and so we will need to take that into consideration as well and provide the adequate coverage. So that's a challenge. But the missions as well, you know, we've seen just a small part of the mission. You know, we've seen that they can launch hundreds or a couple of hundreds of satellites at the same time. Yes, that's probably the first mission they're going to try, but they can do all sort of things with this size. You know, they can transport passengers. Again, another challenge for space insurer. We usually don't insure astronauts when they fly to the ISS or any other place, but we may have to do that. Refueling, you know, we're seeing concept of Starship being used as basically gas station in orbit. So again, that's another sort of interesting application. Debris recovery, you know, basically removal of debris by Starship. You know, it looks a little bit like those Starbound movies where James Bond movie, where effectively, you know, you open the hatch and you're picking up satellites as you go. But it's apparently that's something they're considering. So again, that's another mission that we have to consider, without even talking about the Mars mission or the Moon mission. So all of that is very exciting, but it's a whole new world for us, and we need effectively to make sure that we not only, you know, looking at that, but participating and contributing to this development by providing the right the right solution. So there are plenty of you know, loss scenario with Starship, but if you look at the good side of it, you know, it's tons of new opportunity for us and tons of new application, and again, we're very excited with that. Without further ado, I'm going to something which is even more sort of futuristic, but actually maybe not that much. You know, that's the space resource exploration. I think we've all seen in the last couple of weeks some pretty stunning images, and I think I'm just showing very quick one. So that's the asteroid Bennu. It's located thousands and thousands of miles away. A spacecraft called OSIRIS-REx has been launched about 10 years ago. It was a mission from NASA and the Japanese Space Agency. And just 2 weeks ago, the satellite was effectively in position to land on the asteroid and pick up some soil. And that's what you're showing, and that's effectively, people are quite happy about that. But it's a huge achievement. It's the first time that some soil is going to be taken from an asteroid and brought back to Earth. So the satellite is on its journey back home now. It's going to take 2 years before it re-enters the Earth, and when scientists are going to be able to look at that. But without getting into the detail of the mission, that's a good introduction to effectively the sort of prospect about space exploration and developing a whole business of collecting, exploring and collecting space resources. For example, this Bennu asteroid has been sort of evaluated by some institution in the US, and that their job is to put a price tag on nearby asteroids and planets. And so the Bennu asteroids was evaluated at around $7 million. So that little, I think they managed to capture 2 kilos. So you could make the calculation how much those 2 kilos are worth. Probably not as much as the whole cost of the mission, which I think is in the $1 billion sort of price tag. But it's just the beginning, and I think that's effectively opening the door to a whole new industry. And I think the interest for insurer is that the future mission, which are being prepared now, are not going to be NASA and Japanese Space Agency or European Space Agency project. They're going to be private project. They're going to be commercial project, maybe contracted by space agency, but definitely private project. And those private endeavors are going to need insurance.
Yeah.
We've been asked by one of the university contributing to this OSIRIS mission to price. They didn't buy insurance at the end, but to price the liability insurance for contamination of Earth by this alien soil. In case the capsule were to crash on the Earth and contaminate the land with alien soil. And I must say that that's reaching the limit of our underwriting capacity. That's more like science fiction stuff than really sort of space underwriting. But basically, that's the sort of question we're going to face in the short term. Obviously, there are a legal regime for space exploration and celestial body. Unfortunately, this regime has never been tested, so it's basically a jump into some sort of vacuum. But there are projects being funded at the moment. Jeff Bezos' Blue Origin has already a project to work on behalf of NASA and develop some activity on the moon. Some other companies are doing that as we speak, and insurers are going to be involved very, very quickly. So I think again, that's a whole new business for us. That's extremely exciting, and that's effectively opening doors for more diversification of our book. Stephan mentioned very rightly that our main issue today is managing volatility. One way to manage volatility is increase the spread and the breadth of our portfolio. Obviously, we need to be very cautious with what we're putting in our portfolio, but effectively enlarging our portfolio is a good thing. And I think Starship and space exploration are effectively promising business for us to increase our portfolio. So we're welcoming those business. We would like to help as much as we can, and I think that's something which is going to happen probably in a shorter term than most people expected a few years ago.
Yeah, no, I think the most exciting thing is that we really are at the frontier of science fiction. What used to be just the regime of science fiction movies is now really at the doorstep. And I think all of us in this industry are going to have to figure out what to do and how to address that. And really, now that it's real, what does that actually mean for us? I think we've come to kind of the end of it, but before we end, maybe I can ask each of you to maybe just sum up your thoughts on, if you had a couple of statements to think through about the space industry today and perhaps about tomorrow, what would be your thoughts? Maybe I can start with you, Martin. I mean, from your perspective, how would you sum up the space insurance industry today and tomorrow?
To follow up on Denis' presentation, that's great that we are returning to the moon, of course, because we need to maintain a presence outside Earth, outside a closed station to prepare future mission to Mars. But that's, to me, a very long-term project. In terms of mining, there might be some benefits to extract helium-3 from the moon if we are able to develop the fusion reactors on Earth. But our immediate concern is really to place complex spacecraft with advanced payload. As Denis said, it's our job as broker with satellite operators to explain how these new payloads with processors and a lot of paths are working, and what is the loss risk profile for the underwriters. We are developing software for that with our customer to simulate the whole capacity of the system, not only to have the policy wordings in hard in the insurance contract, but also to have software model to help insurers to capture the risk. And I'm very happy that we had a great year in terms of GeoComSat order, because we had 17 spacecraft order, even if 13 are for the C-band clearance program in the US. That's great. The 4 others are a mix of large VHTS, geomobile services, or more broadcasting spacecraft. So we hope we'll have this trend to continue in the coming years, to go back to a premium level close to $800 million a year, which is really needed for a sustainable insurance market.
Stephan, what do you think?
Well, to wrap up on this presentation, I think that, first of all, what's very, very important for us is that the space industry is very robust. It's a promising industry in development, so there will definitely be lots of opportunities for us to go on. And to touch on what Denis just said, I think that in the future, one of the key assets of the insurers will be to be able to go beyond our traditional borders that we have today in the space insurance industry. We will have to use and benefit from the cross-class resources that we have within a company, such as mining, insurance, for instance, or aviation, because now space is going out of its bubble, I would say. So that's one thing. And on a more immediate future, I think, to answer your question, that the main concern for us, and I believe for the whole space market, is how to deal with the extreme volatility of the book, and to be in a position to provide sustainable profits, which I believe is in the interest of all of us, including our customers.
And Denis, any last thoughts from you?
No, I just want to thank you, Jaclyn, for effectively moderating this panel so smoothly. Thank you very much. It's not an easy thing to do while we all on the home and sitting at home. So thank you for that. I think now I think we've addressed most of the current question in the insurance world today about space, and I hope the attendance is and we're looking forward to more questions.
Yeah, absolutely. Listen, I think we've covered a massive amount of topics today. I think we provided a really broad overview of both the market, rates, capacity, as well as challenges, and what we're looking at covering
Thank you very much,
Thank
Jaclyn.
you, Jaclyn. Thank you.
Thank you.
Bye
Thank
all.
you. Thank you very much. Bye.
Bye.
Thank you very much, Jaclyn. Thank you, Denis. Thank you, Stephan. Thank you, Martin. But most of all, thank you, Aon ISB, for your support and sponsorship for today's webinar series. As always, a fascinating look at what's going on in the insurance industry, a critical part of the overall satellite industry. I think you'll all agree. Thank you very much for joining us this week for the webinar, and we hope that you'll join us next week when we'll be looking at small sat manufacturing, the future of the satellite business. We look forward to joining you for that. It's brought to you by Boeing. So please tune in, same time, same place next week. Thank you again.